This is the Real Estate Power Play Podcast, getting you the information that you need to be a successful real estate investor. Hosted by Mark Monroe, Ronnie Walker, Gabe Rodarte, and me, Marty Grizzanti. Combined, we've done thousands of real estate transactions. So get ready for real stories and true case studies on finding deals, growing portfolios, and making money. Welcome to the show.
Welcome everyone to Real Estate Power Play. We're going live. We're actually today, we got me, we got Gabe Rodarte, we got Mark Monroe. We're actually going to talk about raising private money and using other people's money in today's show. So we come to you every single Tuesday, 12 p.m. We're live. We're both live on YouTube. We have our podcast that's available. You can download it on any of your favorite podcast providers, Spotify, Apple, anywhere. But before you jump in, or if you want to go in and subscribe, guys, how are we doing today? Mark, Gabe, how are we doing, guys?
Fantastic, guys. Fantastic. How you doing, Mark?
Doing wonderful. Can't complain. Nice little crisp air down here in Florida, middle of January. Actually,
what does crisp mean in Florida?
Crisp means what is it? I went for a bike ride this morning. It was
like 75. 60s. Okay.
Yeah, that's funny. I think a crisp, guys, is like, it was like 28 degrees this morning. I was like, man, this is feeling good. This is better than 9 degrees.
That does sound very crispy.
Yep. Anyway, so yeah, I'm excited about this topic. This is a great topic. Every real estate investor needs to know how to raise capital to take down deals. So I think this is a phenomenal topic. I've been raising capital for this business and my previous hard money lending business for several years. So I'm excited about this one.
Yeah, absolutely. Absolutely. Well, let's dive right in and kind of jump into the beginning. So guys, again, we're going to be talking about raising private capital, what that looks like. If you guys don't know, we have all used private capital. So I know Gabe's big on it. I know Mark has been doing it for a number of years. So why don't we kick off, guys, with kind of our history in raising private capital, kind of our journey in using other people's money, and then we can dive into some specifics on what to do, how to start, how to communicate with lenders. So Gabe, if you want to kick us off, man, give us kind of your history with using other people's money.
For sure, guys. So those who don't know, I came from, I had a couple other businesses before, but had no idea what raising capital was, how to do capital, raising funds, any of that. I was scared to start off, even thinking about doing it. And so I had a partner in the very beginning of my real estate career who knew I did construction stuff, and I had crews and all that stuff. And I was scared. Like, I was nervous to ask people for money. I thought that was something that victim mentality, like that was just all over me, of just like, oh my gosh, I can't believe I'm going to be doing this. And so my screen just went, okay. And so I JV'd with a friend of mine. And she knew exactly what to do. And she had a couple other businesses, and she raised some money before. And I was like, okay, you want to JV on a couple things? She said, yes. We came to an agreement. And I was honest with her. And I was like, I have no idea how to do this. And so she wasn't the lender. She just knew how to make all the parts move together. The stuff that I totally know now, but I thought it was everything, Ronnie. Like, I thought it was a world I couldn't imagine. And so I've watched a couple of videos, did some trainings, talked to some friends, and started putting feelers out there. And I remember my first lender is still a lender today. He's one of my best lenders still. And this was years and years ago. And so I remember we were doing something. My crew was doing something for him because he was a friend of a friend. And they're rehabbing his back porch. And I remember leaning against just leaning against the fence, Ronnie. And I got to ask this guy. He was a CFO of this huge company, and he just retired. And I'm like, I got to ask this guy. So I was like, hey, well, you know what? This is what I'm doing. And I'm also, and I plugged it. I'm also been using this skill set to be doing real estate investing. And I've been putting my friends' money to work and blah, 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 go through the whole pitch. realizing that I have never put anybody's money to work at all. I have no idea. But that was the pitch that I've been practicing, my elevator pitch. I've been practicing that, okay? So I let it out there. I probably fumbled it. And he goes, wow, that's interesting. I want to be part of it. That was it. And that just helped me realize, you know what? You just got to ask.
Yeah.
So that's what happened. That's how I got started. And from there on, my friend helped me to understand what the points were, what the interest rates were. I didn't know any of these things, right? And so that's my history. And then now we've raised millions and millions of dollars buying mobile home parks, regular houses, all types of things, properties, assets, multifamily, all different types of things using private money. And then also that leads into seller financing and the seller financing some of those projects.
Dude, that's so good, because at the beginning, when you're first getting started, that nervousness, like you said, of really just asking for the first time, right? Especially depending on how much money you might have had at that time or not had. It's like, dude, I'm asking this guy for all his money that I don't even have. He's going to entrust me with that. There's kind of like a psychological barrier there, right? And so, guys, if you are getting started, you will have to overcome that and really get over those limiting beliefs and get in the mindset of, hey, I'm a real estate investor. Like, I put people's money to work and I make them money. Dude, Gabe, that is such a good story. Mark, how about you, man? What's your kind of history, where you started with raising money, and then kind of the trajectory and where you're at today?
Yeah, I just want to piggyback back real quick what you're just saying there, Ronnie, about, you know, getting over that mindset. And you, Gabe, is like, you guys got to approach it as like, you're not asking people for money. You're bringing an opportunity to them. So, and you just want to bring them part of it. So keep that in mind when you're out there, and your mindset is just, you're not like, hey, I'm not asking you for money, because then it's like you got that scared factor. But you got to present it as, hey, you're bringing an opportunity to them and they want to be a part of it. So we'll dive a little bit deeper on that, but that's something I want to talk in. But yeah, you know, as I mentioned, you guys know, my background is real estate banking. You know, I got into it many years ago. You know, raised money from lending institutions, you know, funding loans. You know, back in the day when Mellon Bank, we had like a $25 million line to fund loans and whatnot back in the day. But, you know, in this area, you know, private money and using private money is essential, especially as you want to grow your financial empire in real estate. You know, we'll dive into a little bit more, but using IRAs, that's probably one of the most the best vehicles out there to raise money through friends and family. And that's how you want to start out with at first, is really start tapping into some of your friends and family and say, hey, got this opportunity. Do you want to be a part of it? Keep it like that. You got this opportunity. Hey, you don't want to go in there like, hey, do you mind if I get $200,000 because I want to do this fix and flip? No, I got this opportunity. Have the benefit, show them like your projected numbers, do the worst case scenario. You never want to you always want to under, what is that saying? You want to under promise and over deliver, and you want to do that. And then that will grow, and then your friends and family will start talking about it. So that's usually where you'll start with your friends and family at first, and you know, give them a little bit more in a deal and kind of do a joint venture on it type of thing just to start it. And once you get going, everything will go there. But always keep that in mind. You're giving them an opportunity to be a part of it. Don't go in there asking for money. Hey, I got this opportunity. Would you like to be a part of it?
Yeah, that's amazing, because with especially people, you know, and there's some other guidelines there, but you want to tap into that network of people who are looking to grow their finances, right? Like the money they saved. Hey, I have this opportunity that can make us a bunch of money, and here are the benefits. This is why people want to be involved. If you don't want to be involved, that's okay. But it's also, I think a lot of people have this misconception that I know I did for a long time. I've got to go out and raise money first from a bunch of people I don't know. Right? That's like, man, I gotta try to convince the world to give me all this money so I can do it. That's not actually the case. That's not how I've done it, right? Like a lot of what I've done is through relationship, through friends, through family, through business acquaintances, where you call them up. Hey, I have this opportunity. You know, I need $80,000 to be able to purchase this property and rehab it. Are you in a position where you want to take advantage of that or not? Right? And being able to jump into it, I think that's a really good point, is not only having the courage, but look in the right areas when you're starting. So again, guys, we're talking about private money. On my side with raising private money, I've actually hacked a slightly different approach. I've raised it directly as of recently, but for about 5 or 6 years when I got started, I actually went to another individual who had the money, right? So what I did is instead of going and asking for private money directly, I found someone that I partnered with and JV'd on and basically allowed him to broker my money. And so he had millions of dollars of private money. And then I would go to him and say, hey, here's the opportunity. Here's what I'm going into. Can you go get the money for me? And you can have a piece of brokering that money. And I basically just worked through him for a while until about 3 years ago. And then I essentially did the same thing that Mark, you were talking about. I went to friends and family. Then I went to, outside of that, I went to the relationships. And just literally taking that pitch. I love the pitch you mentioned, Gabe, because that's my pitch is, hey, I'm investing in real estate. I have people that are investing with me. I don't know if you're interested in that, but I have these opportunities that are coming up. Here's what I'm currently paying. Are you kind of in that ballpark? Would you like to get involved in the single family realm? Because I'm allowing people to invest in high value properties and secure their money. Do you want to be involved in that? And would it be worth exploring a further conversation? And a lot of people say yes. A lot of people want that. And then we can talk about, how to approach people initially and then how to service them and take care of them. So again, we're talking about private money. So Gabe, I have a question for you.
Let's do it.
We're getting involved and we're raising private money and you're building those relationships. Someone says yes to you. Okay, I'm going to start after the saying yes. We'll go to the actually finding the people second. But someone says yes, I'm interested. What's the next step? You might not have an opportunity right away. What's the next step, right? I've gotten a ton of questions about this.
Right.
Hey, I have a guy who's willing. Well, how do I now go actually get it when I
what
have
do
an
I
opportunity?
do? Yes.
Yeah,
Someone
so
wants
what's
to
that step?
they have 50 grand, 100 grand. It doesn't, I mean, the dollar amount. The next thing is to go, okay, cool. Well, how serious are we here?
So you asked directly, like, how serious are we?
Yes. This morning I have a text message from somebody. We have a deal going on, and she mentions yes, and I'm going, okay, cool. Well, how serious are we if we could get this thing closed in 2 weeks? Like, are you good? Okay. Because so let's back this up. Let's make this an educational thing, guys. If you don't ask someone where they're at, how do you know where they're at? Right. I mean, how do we know? It's just like dealing with the seller. What do you mean by this, Mark? What do you mean by that, Ronnie? Okay, so you said yes. Does that yes mean that we need to spend some time? Are you yes meaning you're interested, or yes meaning you would like me to sit down with your spouse, or we need to have a conversation that's more in depth? Is this more with the company? Like, it goes all over the place. So so you have someone involved, and they want to be involved in real estate investing. So here's a couple questions that we do. Let's just go over a few of them that are more educational type stuff. One, I would ask someone, okay, what's your timeline? If I come up with the deal today, and I do a hypothetical, if I come up with the deal today, how fast can you close? All right. So this definitely for newer folks, like how quick would you be willing to do it? 2, is there any parameters that you have? Like, are you interested in all types of homes or properties? Are you talking about mobile homes? What about if it's a RV park, mobile home park? Like, what is your perspective of lending, and what's your comfort zone? I know a lot of people that say yes, but they only want to lend on homes that are picture perfect, 3-bedroom, 2-bath in the best neighborhood ever. That way, if something bad were to happen, they can take it over. Right. And I'm like, okay, cool. Well, I tend to run in another direction with different type of properties, but if I ever run across something like that, I'll let you know. And then, okay, cool. That calms them down. And you go, okay, so what is some of the reservations that you might have? Let's just talk about them now. Because here's the thing, guys. And this is where it comes to, like, Mark and I have had these kind of conversations before, is you don't want to get to the closing table or 2 days before and the wiring instructions are coming out and the lender is getting cold feet. Okay. And they're like, oh my gosh, I'm going to be really involved. Like, did anything happen to this house in the last couple of weeks? What's going on? So you want to get rid of a lot of those things beforehand, or address, I want to say get rid, but address the needs, because we're just people, right? What if they want to be part of it? What if they thought the whole time, right? And because the guys, look, this is where lawsuits happen too, right? Like, what if they thought the whole time, Ronnie, that they were going to be a 50-50 partner and get 8% interest? we need to have these conversations of going, okay, then once we get into the yes and we get into these other things, we go, okay, what kind of rates are we talking about here? Right. And so what do you normally lend out your money on? Well, I've never really lent it out before. Well, this is typically the type of loans I get nowadays. Is that something that would fit you? Right. So in the beginning, you're probably getting 12 points and 2 points and 12%. And then it goes down the more reliable you are and the more credibility you have. So you can start asking these questions in a different way. And I love what Mark was saying is like, approach it with confidence. So that's some of the stuff that I get. These are just some of the questions I ask. I don't know. Like that's about it for me. There's probably a ton more.
Yeah, I think this is really good. Like the nugget that you gave that is so good is it's the deep conversation that leads you to get into the money. You have to ask to get over the hump of yes or no. But what actually gets us to the money in our pocket is digging into those details and then realizing, hey, not only do you have an answer, but you have the right questions to ask them to pull it out. And that just makes people feel more comfortable.
Right.
I can't tell you how many times you get into the deal. They say yes. You think it's a yes. I did this when I first started raising private money myself. I wouldn't have any other conversations. I'd call them and they'd be like, not right now. But then I started having, okay, yes. Okay, what does that mean? Are you okay with single family? Are you okay with this? Okay, just like you said, hey, can I call you? Like I'm picking up 2 properties a week. Can I call you this week and get $80,000? Are you willing to lend for the rehab?
Right.
And once you get into that commitment solidifies. I think it was Chris Voss, the guy who wrote Never Split the Difference, is yes. There's actually 3 types of yeses. There's a superficial yes. There's a yes to just kind of get you to go away. And then there's the real yes, right? Like the real, hey, I'm legitimately interested. And to get to this real one, we have to cut through the fluff. So, all right, Mark, do you have anything you want to add to that? Or if not, I have a different question for you that I wanted to ask you, but you have anything you want to add to that?
No, I was going to ask you the same thing, what you do once somebody commits, the same things, but you pretty much answered it there. Like, that's good stuff. So no, go ahead. What's your next question?
Yeah. So the question I have for you, and I know this is getting into your little secrets here. So I'm going to ask you to kind of pop the lid a little bit and share with us. How do you approach raising private money, right? Like going out. So I asked Gabe what to do after you find them, right? From your side, I'm asking, okay, I want to raise 500 grand. I want to raise $1 million. I want to go out and find my lenders. Like, what's your first step? And then what are the next 3 or 4 action items that you do to go from I need the money to I'm talking with people with money? What does that look like, man? Unpack that for us.
So I'm going to actually back up a little bit on this because I'm always, I'm approaching out there of having conversations with people like what you do. I line people up and build up my network of investors. And I actually use my CRM, and in my CRM, I have a separate contact just for private money people. So that's like in the beginning, I treat private money people just like trying to find sellers, just to trying to find people. So I utilize a CRM. So I'm out there always talking to people.
Even on personal relationships.
I'm sorry?
Even on personal like people you're friends with, you keep a CRM of the details you've talked about.
Correct. Yep.
Dude, that's
absolutely.
amazing.
Everything. I detail it. I treat it just like a seller lead, and I keep it right in there. And then I also will connect to all these people through social media. So we're always staying in contact. They see what I'm doing. I see what they're doing. So when I have a conversation, oh, how was your vacation? I see you went up to the college. You had orientation with your daughter. How did that go? Then I build that. For me, it's all about building personal relationships with them. And I'm always in there. So one of the things that is key when I'm talking to people and they'll say, what are you doing? What do you do? And I'm like, oh, I'm in real estate. And they always say, what kind of, I'll say, sorry, somebody just sent a question there, so it threw me off. But I'll say, hey, I'm in real estate. People will say, God, I'd love to get into real estate, but I don't have the time. If they ever say that, that's a key that is your private investor. I'd love to get into real estate. However, I don't have that time. And then I'll say, well, you do know, if you have a IRA you can put the capital to work and we can kind of partner up, or you can put your money to work. You can be a private lender. So you don't need the time and energy. You just let your capital go to work for you. And then we'll start that conversation, and then I'll add them into my CRM, do my drip campaign, and just constantly stay in front of them, touch base with them, see how things are going. I nurture that relationship, and it usually takes probably about 6 months. And a lot of times I don't ask them for capital. They'll say, hey, I want to put my capital to work. Do you mind? And then if there's a deal that I need some capital, I'll just start going through my CRM and just like what Gabe was saying, there's been times where somebody said they committed and they're like, oh, you know what? I went and put this capital to work somewhere else. So you need to have backups in place. But a CRM is great. And just networking.
And Mark, so we have a question here. If you don't mind, what is a CRM? Can you explain what a CRM is?
What is the abbreviation? Central?
It's a customer relationship manager.
That's right. Customer. I was going to say client.
Yeah, same thing. Customer. Basically, it's a software. It's a software where you're keeping track of all of your contacts. You can put notes in there. You can have statuses. Some of them, I know the ones that we have auto drip campaigns. It's a way where you can meet with someone and essentially systematically capture the notes, the conversation, the process that you're in. That way you can, if you meet 100 people, you're not going to remember that. And from a private money standpoint, it's like an old school Rolodex, right? You have, hey, this is where I met them. This is what we talked about. This is what they got going on personally. This is what they're looking at professionally. And you keep those notes. So that way, before you call them or when you send them a note or whatever, you can review those documents or review those notes, be like, oh yeah, that's right. We were talking about blank. Their daughter was, going to a soccer tournament in North Carolina. Let me ask him about that. And then you call them up, you ask them about those things, you connect personally. Hey, where are you at with this? And you're able to really pick up that relationship as if they were a best friend, but you're not relying on your memory. Your memory is the notes you put in the system. So you don't have to rely on this thing. A lot of success, one of the common denominators with highly successful people is the fact that they have a way of capturing information and putting it someplace that they can recall the accuracy of that information very quickly. And they don't have to rely on their mind, which allows them to be in a calm, resourceful state rather than in a hyperactive, like, oh man, I can't remember. Where's this stuff? They're organized and they have a way of putting things in place to remember. And a CRM is just a great way of doing that.
Yeah. And I have a great CRM system. I built mine out like streamlined. Like I have it for sellers. I have it for buyers. I have it for JV. I have it for private money, institutional money. So it helps really keep, and it will really take your business to another whole level. Just building out that CRM. I think Gabe and I, about a year ago, we dived into Gabe's system and we really got it really robust and really worked. So I highly recommend. And Podio is a good one. It's cheap.
Yeah. Podio's pretty good.
Yeah, Podio's. We all use Podio. So Podio is amazing, especially for real estate. It's fully customizable. That would be amazing. So let's jump back. Gabe, do you want to add anything on the finding of private money that Mark tapped into?
Yeah, guys, look, there's private money everywhere. You can.
Whoa, stop. What?
There's private money everywhere.
Guys, that's freaking amazing. Say that a third time, just so people can hear, because I hear like, where am I going to get the money?
Yeah. Well, you know what, guys, that is true. Like we have some projects that I'm like, okay, I need to figure out where to put the funds on this. And part of it is because I use the funds for everything else that I'm working on. And I got more projects coming up that are bigger. They're just different. So I need to go and look for different types of funds. I think that what happens though is that we get distracted when we hear someone say, hey, I have 30 grand. What can I do with this? I used to be in that same boat of going, hey, I have 30 grand, or what can I do with 15? Can I put it to work? And I didn't really know how to put some of that stuff to work at the time. Now I'm going, okay, we could bunch it together. I got a father and son team that they merge together all the time on my deals because the father wants the son to be involved, and the son's probably 35, 30 years old. The father wants the son to get involved, and the father wants to put his money to work. So they both go 50-50 in my projects. right? And they both are in first lien position because it's just they're connected together. So it's really cool. So that's one of the things there. And then the other part is to create the credibility that you are a borrower, the credibility that you have things to help someone else collapse time by investing their money. That's what I like to say. I'm like, look, you ever put your money somewhere and just not do anything? And you just wonder, okay, what else could I be doing? Well, yeah. And then like Mark was saying, but I don't have the time or I don't know where to go or stuff like that. Then you could just go, look, I help people collapse time by putting their money to work in other areas besides the normal traditional places. We put it towards asset-backed investments. So that basically means that you're covered, Ronnie, in case anything. If I get hit by a bus, you're covered. You're able to go. Something happens in the stock market and you're out, then you're calling TD Ameritrade and they're going to go, well, you're the one who did it. Like, you're the one who invested in this. So it's a little different. This one's more secure. Okay, cool. So now you move on to the next step. So I like to see that there's money everywhere. And if you are in the fundraising mode, then you need to be looking at it, right? I have a neighbor. They're a very possible lender. I have friends that are in my kids' sports communities, and talking to them over the weekend are going, man, I've always wanted to get involved, right? And so this is a segue. This is where I think people miss it, though. They misunderstand the fact that everybody does something with their life. Okay, like, no, for real. When we look at someone, we might be looking at them as prey for, I need some money to go find a deal. And instead of going, that person, Mark, he's, let's say Mark's a good looking 40-year-old, right? And I'm looking at him and I'm going, this guy has 40 years of track history doing something with his life. Mark, what do you do? How long have you been doing it? What else is going on? And come to find out, it might not be Mark, but it's Mark's brother or Mark's cousin or Mark's friend or Mark's relationships that he has. Yeah. And so we don't need to look at someone like that. We need to look at them as saying, I want to build as many friendships as possible because these friendships will be good over time. What happens? This is the part that we miss, guys. And this is my little rant, but I'm going to say it. Gosh darn it. I think we misunderstand that there is a growth prospect for all of us, right? Like in 2 years from now, the person that I was like, they only have 10K to put to work. 2 years from now, they could have had a windfall. They might have learned something else. They might have picked up a great job. And they're going, Gabe, you shut me down, 2 years ago. I don't want to talk to you. But now they're in a position to lend. What if you planted a seed of going, when you're ready, I want to do work with you? Right. And so now I've been looking at business a different way of going, it's just planting seeds, guys. That's how I've been looking at stuff. I'm just planting a seed for you to say, I want to do work with Mark in a couple of years from now. If he's not ready today, in a couple of years from now, because what if I'm involved in something really cool and I need his funds? Anyways, that's my little takeaway there, because I think that we misunderstand why we're doing this. It's not just a take, right?
Mark, do you have something to add to that, man?
I actually want to ask you, Ronnie, like, you asked Gabe and I both how we go about finding capital. How do you source yours?
Yeah, so I ask everybody I meet essentially two questions. I just did this yesterday, and I got a recommendation for a private lender. I ask them how I can help them, and not only with their business. And I ask them essentially, who do they know that I should know? Now, I don't ask it just like that, right? But that's essentially what I'm asking. So when I set appointments, or when I'm meeting with someone on Zoom that I'm connecting with, or when someone reaches out, I'm trying to find out, hey, what are they trying to grow? What are they trying to do in their life, whether it's real estate, business, services? Then I share what I want, right? In relation to this relationship, hey, I'm looking for more deals and I'm looking to raise $750,000. Whatever that may be. And then I just simply ask, hey, do you mind connecting me with that guy? And I just trade up. That was a phrase, I can't remember exactly where I pulled it, but they know people, especially if they have a private lender or if they're working with somebody, or they might know somebody with $3 million that's not giving them money because they're not in the same industry. But hey, who do you know that would be very interested in this? And then I get a connection. And then from there, the guy sent me a text message with the dude's phone number yesterday. He's like, hey, reach out to Jay, right? And so that's how I go about it. I actually created I went through all my contacts. I wrote them out. I figured out, okay, who's all the people I know? And I need to create a systematic way of developing relationships. And so I started from my network. Who did I go to high school with? Who did I go to college with? Who have I met at different old jobs? Who have I met in real estate along the way? Who are my service providers? And so when I was ready to build up this, I sat back and I started with everybody that I knew. I looked down, I wrote it all out. And then I just said, okay, where do I think the best place to start is? And I just literally started calling people, reconnecting with them. And I actually did the same exact thing you did, Mark, or that you're talking about, or no, I think it was Gabe. I started with, what do you do? And then when they asked me, I was prepared. That's what I do. I work at real estate and I put people's capital play. And we buy real estate, and I'm a real estate investor all over the country. And this is how we help people. And I'm really good at blank. And then people just start asking, well, okay, well, what about that? And the cool thing about being in real estate that I love, my wife gives me hell for it sometimes, but people want to talk about real estate, right? Like, people want to sit there and talk to you for 2 hours about real estate. And what an amazing attraction tool of this. Now, the other thing to do is, if you're fully open to the projects that you are doing, put them on social. Because when people see that you're actually doing deals, they also want to be involved, right? People will reach out to you as you put stuff on social. Hey, I'm doing this. Hey, I got this going on. Hey, I'm at this property. And people will reach out to you. And then when you bring it up, they look you up on Facebook and they see all your stuff going on. What an amazing way to raise money. So that's essentially what I do, is I build it into relationships. And then I ask, how can I help you? Even if it's not work related or real estate related. And then I just go in for, who do you know that I should know? And I do it a little bit more pointed than that. It's not so open-ended, but that's the question essentially I'm asking.
I want to just piggyback off of that. When you start, how I go about it, and when I'm starting to talk to people, a lot of times I'm in a social gathering event and I'm just starting to talk to people, getting to know them, what they do. And then we just start, a lot of times we start talking about economics, how the economy is doing, how are they doing in the market. And like today is a prime example. The market, it's down 400 points, the Dow, as of today. These are the days where a lot of people, they're kind of getting nervous. They know that interest rates are going to go up several times this year because of inflation. So you start to have that conversation, and then hey, talk about diversifying their capital, instead of just having it all in the market, diversify in some of the real estate. Also, another place, and Gabe was saying, hey, there's money everywhere. If you're new, just look at the people that, where you go, the business owners, your dry cleaner, your restaurants. Start to get to know the local business. A lot of them probably already know you, but just start talking to them a little bit more about, economics, what they're doing, business, and then let them know a little bit. Oh, I do real estate. Just talk about a couple of your deals. And then eventually over time, that will nurture, and there's your private lender right there. There's your private money. It just takes a little time. It just can't happen overnight. And the other thing, keep in mind, is if you're new in this and you're worried and you're scared about trying to get capital, if you got a good deal, the money will come. And I a lot of times say this: if you have a great deal, the capital will just follow suit easily.
Yeah, there is a part though, Mark, that I see where people have a good deal. And I think that's why you're good at working with newer investors, by helping them understand this, of you helping to open up the eyes of saying, this is actually a deal. And I think that what happens is, if I'm mistaken, is that you have a way to help people understand it, because if you have a good deal, but you don't tell anybody, right? That's kind of the problem. So what is a solution you might be able to help someone with? Because I know you do a lot of this, Mark, of the newer folk who has a good deal, but they don't know what to do. Like, yeah, they have a good deal, but how do I find the capital? Right? The capital is going to be there. Someone's going to say yes, but where do I find the yes person?
Yeah, that's where it goes back to just building up your network and start talking to people, or reach out to an experienced investor like like yourself, Gabe, or like Ronnie. If you're lost, you're not sure, reach out to somebody that's been in the business and they can kind of just network with them and partner up with them on a deal. That's another opportunity. Or just jump into some of the other groups and just start asking people. But you should always be building your network up with investors. Capital, always constantly be building a network. So then when you get a great deal, you can start dipping into your network and resources and start asking and picking up the phone. Hey, Gabe, I got this deal. What are your thoughts on this? How should I take this down? Where should I get the capital? Oh, Gabe, hey, why don't you reach over to Ronnie? Ronnie might know some sources. Or, the same thing. Like I have a property right now in like the Alabama, Louisiana area where somebody this past or last weekend went and took the AC unit, the copper. So, we're just reaching out to resources. Hey, where can I find a good used AC compressor out there? Blah, blah, blah. It's the exact same thing with capital. It's the same approach.
Dude, I think that's incredible, because that's really what it looks like is when you reach out. For 5 years, let me put it this way. When I got started, I decided, I'm going to figure out how to be the very best marketer for homes, for wholesale homes in all of Dallas-Fort Worth. That was my goal. Okay. So what I decided is, I'm going to outsource the selling of my properties. I'm going to outsource the selling or the raising of capital when I want to take some down. Like, what I'm going to focus on and get really good at is finding these homes. And so what you just said, find the guy who has the money, right? Like, literally, and then just go to him and be like, hey, if I need $1 million for blank, are you able to provide that for me if we could work out a brokering deal? And then they're going to tell you straight up, yeah, I can do that. This is what I want. Have 15 of those conversations, figure out the guy who's going to work good with you and what you want. And now you have one guy that you have to manage a relationship with who's managing 15 relationships. And you can go to him and he can be that sole source for you for a while until you're ready to focus on it. This is such a huge hack because you essentially leverage years of relationship building through one or two people, right? And I think you're able to collapse time. Now, are you reliant on them? Yes. But imagine if you have your go-to guy who's built these relationships and you're building your own at the same time. Well, as you're doing business, you can just call this guy, but then you can also say, hey, this is how I'm working with other people. And then you call this guy, hey, would you like this opportunity as you have them available? In my opinion, I think it's one of the absolute best ways to go about it, because you're gaining credibility on both fronts to someone who's already active in the industry. And for when you start doing it yourself, you're already involved in the process. You've already learned it. And so now you can talk with experience to somebody you've raised yourself as you're building that relationship.
One thing I do want to just say real quick with Gabe, and Gabe, I'll turn it off to you. There's a question and I'll let you answer there in a second, Gabe. But one thing, like how, you got a good deal and how do you go about it? Highly recommend. You got to be cautious of going on the social media and posting your deal. I'm looking for capital and posting a type of return, because it's violating the SEC rules of raising capital without being licensed, using the 501c reg. So be very careful, because I see a lot of times in groups out there like, hey, I got this deal, and posting this type of return and this rate and blah, blah, blah. If you don't know the person and you're soliciting capital, you have to be very careful. The SEC says you should have the 3-touch rule. You should actually know the person at least 3 different times and over a certain time period. So just be very cautious on that. But Gabe, there's a question there. Do you want to take that question?
Yes. So we have, how does the payout work? All right. So this is a fun one. And this is really the next step, because someone's going to ask you, how does the payout work? Right? This is a common question. So the fun part about private lending is the payout can work in multiple ways. So let's just go over the traditional way that the payout works. Traditionally, for something like what I do, I normally don't pay a lot of points anymore. But what I do is, let's say if it's a 10% fee, right, that would be 10% interest only. So you take $120,000, you multiply it by 10%. Sorry. You multiply it by 10%, and that goes out over the course of a year, right? And then you just divide it by 12, and then that 12, like the 12 months, and that's your monthly payment. Now you can do other things where you don't pay them till the close of the property, stuff like that. Ronnie, what kind of unique ways have you done private lending?
Yeah, I think, and guys, again, we're talking about jumping into private lending. So far, we've talked about how to find it. We've talked about how to have the conversation. And now we're jumping into how do you do the payout? And one of the things you'll find is you can structure this payout in any programs that you want it to be. And that's how you think about it is, okay, here are different programs, right? I'm willing to pay this way, and this way. But as far as creatively, Gabe's right. Right now, we're getting private money between 8 and 10%. Sometimes there's a point, sometimes there's not, depending on who you go to. As far as the creative structure, you can either do it on a monthly level, interest only. You can do it on a deferred payment level where it defers for a certain amount of time and then payments start. Or you can have that payment deferred until the end when your profit comes out, so you don't have a monthly payment. So like, for instance, let's say I borrow $100,000 and I have my payment that's supposed to be interest only. And I say, hey, I'll pay you the entire sum when I'm done with the project. Basically, those payments occur on a monthly level, but you don't have to pay anything until you sell the property. Now, something like that, you're going to want to understand your numbers, make sure you're through, but it allows you to leverage and do multiple projects at once. And it allows the lender to potentially make more money because they're allowing you to be more flexible with the money you're using. So that's just one scenario. There's others you can jump into, but you will be paying interest, usually interest only, on the money that you're borrowing. But the term of the payout can vary between people. Sometimes they'll lend you a certain amount of money out of their ROA on a property. Sometimes they'll lend it directly to your bank. Sometimes they'll lend it on a second lien for a different term as a bridge loan. And so it really kind of depends. And I think it's outside of the scope of this call, specifically on how to raise. It really, you have to ask yourself, what do I need the money for? Right? Do I need the money for long-term holds? Do I need the money for short-term flips? Do I need the money for the rehab on the short-term flips? Am I trying to be zero money out of pocket so I can do multiple deals? And then as you're doing it, you'll find your stress factors. Hey, I've got 5 properties right now. Actually, I have 4 properties right now that I have private money on. Well, I have monthly payments on that. Right? So, okay, well, maybe I'm willing to pay a little bit more if I can defer a monthly payment from a cash flow perspective. And so a lot of these are questions that I think are individually asked, right? Like Gabe's scenario is going to be different than Mark's, right? For instance, my scenario is going to be different than Jim over here because we're doing different things with the money. But really to ask yourself, what do you need it for? Not let me get this money. Because here's how I like to look at it. Other people's money is like a fire, okay? You can use that fire to grill a really nice steak, right? And it's going to be amazing. Or you're going to use that fire and it's going to get out of control and it's going to burn your whole house down. And so you really need to understand, okay, how am I going to use this money? What am I going to use this fire for? Because it can either transform your business or if you're out of control and you're not really sure what you need it for, it can really mess you up. And that's where you in that relationship with that private lender and knowing exactly what you're going to use this money for is so critical. And why having a relationship with them is so powerful, because when you have a relationship, there's something on the line there. They're helping you and you're helping them, and you have a mutual goal that you can work together on. So, Mark,
I got a question. I got a question for Gabe, and then I'm going to ask you the same question, Ronnie, afterwards. What happens if you're in a deal and you have a private lender, private money, and they need the money out of the deal? Something came up. There's an emergency. How do you handle that, Gabe?
So lately we've been doing, and when I say lately, it's kind of a perk that we do with our lenders of doing a 90-day out clause. And so that just helps our lenders know, especially on the shorter term stuff, that, hey, look, if you really want to get your money out, give me 90 days and I'll find a substitute lender for where you're doing. And what that does is it helps people to be more open and going, oh, okay. I mean, it's kind of like that thing you see when you sign up for something online and they go, well, you get your money back, money back guaranteed. And then it just calms everybody down. It just calms people down. I've had that called on me once, and it wasn't, and because it was a good deal, it wasn't hard to find a lender. And it was a longer term deal, and I had so much equity into it. I actually pulled some money out, and just recycled that money. So it worked out pretty good.
Ronnie, same question for you. How do you handle that if somebody needs their capital out?
I've done exactly the same thing, and it depends on short-term or long-term. If it's long-term money, we usually go into a long-term option, and so the ability to find a substitute lender is usually a longer time period, because long-term money is much harder to find than short-term money. So long-term money is like, hey, if they're willing to lend it to me for a 10-year period, right? If it's short-term money, we do the same thing. We have a 90-day. We can substitute it with another lender. I've done that twice where that's had to happen. And it's usually nothing to do with the deal. It's usually something along the lines of a death in the family, or it's something where they need access to that money for one reason or another. The long-term stuff, it's different, right? You either have to refinance, you have to do a collateral assignment, and you have to have time of, hey, I need to change this with another long-term option. And depending on what your strategy is, you need to work that out. On my side, we've been able to replace that long-term money in a collateral assignment. And usually that takes anywhere from, I would say 3 months to 6 months to get a lender in place to place it into a long-term property.
Nice. There's a questionnaire that we're talking about right now. Ronnie, do you want to take that question?
Are there contracts for these deals? Well, yes, there is. I'm a little confused on the question because there's both contracts with the homeowner of the property you're purchasing, right? But then the private lender, depending on the state that you're in, they're either going to get a note in deed of trust, or they're going to get a note and a mortgage on the property. And so there's funding docs that either your lawyer or a local attorney, or when you go to the title company, they will be able to create for you if you don't already have them. And then other lenders, like bigger institutions, if you do like national lenders, some people will have their own docs if you use like a national lender. From a private money standpoint, like an individual, just go to your lawyer, tell them what you're trying to do. Say, hey, they're planning on lending me money on this property. They want a first lien position, or I want to put them in a first lien position. What documents do I need? Do I need either a mortgage and a note, or do I need a deed of trust and a note? And they'll be able to walk you through depending on your state. All right. So I want to, we're coming to the end. We got 10 minutes here. So we've talked about, in raising private money, we've talked about finding the money. We've talked about the pitch and the value proposition and why people would want to raise money, or why people would want to put their money in our properties. We've talked about after the deal, the post, the terms, what it looks like, what the payments looks like, what happens if they want their money back. So let's transition. And Gabe, I'm going to ask you, how do you facilitate? And this might be a can of worms. So let's do a short answer. How do you facilitate the transaction of the money, right? Because okay, so I understand I'm going to talk to them. Do they send me the money directly? Do they send the title? Like, how do you actually get the money from the lender into your deal? What is that?
And this is a good question to protect the lenders that are out there, right? So I don't see any of the money at all. I can't even think of a time I've ever saw someone's funds. So how normally it's done is through a title company. This is traditional. Through title company, the title company gets the wire transfer from the lender. The lender transfers it from their whatever IRA account, bank account, TD Ameritrade, whatever it is. They transfer that over to the title company. The title company holds it in escrow, and at closing, they apply those funds to the property. That's typically what I've seen. Have you guys seen something else?
That's perfect. No, that's absolutely perfect, because that's what's happened. Because you don't want the responsibility of $100,000 directly while in your account. Like, that's not good, right? And two, it protects not only the investor, it protects the private lender, right? That, hey, they are putting their money on a property. Now, I have done it on my side, and Mark, I want to get your answer to this. I have done it where they have lent my company the money, or we've set up the option of a line of credit, where now we've gone to the bank and we've actually set up a line of credit where I can draw that for convenience sake to be able to close quicker. I have also set it up. That gets a little bit more creative, and it's a little bit more in depth and outside of what we're doing, but you can do that too. You can create essentially a line of credit with your lender, so you can draw on that at any time. I have that set up right now with one lender, and we're actually looking at setting up with another. However, Mark, do you have another answer? How do you facilitate that transfer of money?
I pretty much used the exact same process what Gabe was saying. And then I've also, in one of my businesses, we used to do it for funding businesses. We did hard money lending business, and then what that was, it just came in as a note to our company. And then we would just turn around and we could redeploy that capital in several different businesses. And then we would file a UCC filing against those businesses. So there is different ways of doing it. I would recommend checking with your attorney in your state and trying to get that set up the correct way. But the cleanest and the easiest way is what Gabe was saying, is just have it come from an IRA, use like a company like Quest custodian, and then have them do all the paperwork, and then send it directly to the closing agent and let them just file a mortgage on or the deed of trust on the property. That's the cleanest, but you are correct, Ronnie, on that. I've done that before. Before we end here, I just want to recommend a really good book out there. I highly recommend Raising Private Capital. I'll put it in the notes here by Matt Faircloth. The book is really phenomenal. He goes in detail, step by step, where to look, how to go about it. So I'll put that in the notes. But this is a great topic.
Absolutely, guys. Absolutely. So we discussed raising private capital, what that looks like for real estate, how you can do it. Guys, final thoughts, last thing to leave everybody with, and then we'll close up. Gabe, why don't you kick us off?
Yeah. Final thoughts, guys. We are, this is a full-blown podcast, guys. We've been doing this for a while. So like us, share with your friends. We're on the YouTube also, so you can check us out on YouTube. The Real Estate Power Play. You'll see our ugly mugs on there talking about real estate. So some of us have really good voices, like Ronnie, who's really easy to listen to. So you can listen to that while you're out and about doing things. Just want to remind you guys to like, subscribe, and connect with us on the social web.
Awesome. Mark, any final thoughts?
Yeah, just always keep in back of your head. People are always afraid of thinking I have to ask people for money. Don't look at it like that. I mentioned it earlier in a podcast. You're presenting an opportunity to them where they're going to make money and they're going to partner with you. So always keep it in that mindset. Is you have an opportunity. Hey, I have this opportunity. Would you be interested?
So. I love that. So, and the last thing, guys, is we come here every Tuesday. Every Tuesday at 12 p.m., we go live talking about different real estate topics, right? We're real estate investors all over the country. We're in Florida, we're in New York, we're in Michigan, we're in Texas. And that's just our primary markets. Like, we're doing national stuff all through the country. So if you guys have questions, feel free to reach out to us. There's a description in all of the show notes of how to reach out to both Gabe, or all of us, Gabe, Mark, me, Marty, in your area. We'd love to walk you through the deals. We'd love to answer your questions. We'd love to connect with you. And if you guys are if you like this, share it out to your friends. Share the content out. Look at us up on Apple Podcasts or on Spotify or anywhere where you listen, and subscribe to our channel. And we would love to help you guys out. But until next time, until next Tuesday.
Have a great one, guys. This has been another episode of Real Estate Power Play, guiding real estate entrepreneurs to a brighter future. If you liked what you heard, consider subscribing wherever you listen to your podcast, or follow us on YouTube at Real Estate Power Play.